In order to win the AI race, you need to have all of the world's AI developers to be building on your platform. Just as we would, if you're an app store, you would like all of the apps to run on your app store. If you're an operating system, you would like all the world's applications to run on your operating system. If you were a chip, an American tech stack, you want all of the world's AI developers to developing on your American tech stack. That's true whether we're here in the United States or whether it's developers in China.
Joining us right now is Tony Wang. He is T. Rowe Price portfolio manager. And Tony, let's talk through the valuations of these AI companies right now. Andrew was just showing us some videos on Sora, and those are all great and interesting and fun things. But if you really believe the valuations of these tech companies, you have to think that there is going to be some serious business case uses for these things to pay for just how expensive it is, correct?
Yeah, absolutely. I think that with every new market, there's a lot of new demand drivers that will materialize, but you can't see at the present day. And so what I'm looking forward to is, in monitoring, is agentic AI. I think that we're going to have a lot of digital workers that are going to work alongside human workers, and that's going to really uncap productivity. In addition, I think that we're looking for physical AI to manifest itself with robotics, and it's come a long ways, and I think it could be inflecting going forward. So definitely, a lot of demand drivers, I think, that we have on this AI market here.
How far out do you see that? We already hear companies talking about how many agents, AI agents, they have working for them, but are you thinking that these are some serious changes that evolve over the next year or two, or does it take longer?
Yeah, well, I think it's been happening pretty quickly over the last few months, actually. I think that the industry was talking about it over the last few years, but really, I think we're seeing inflection in the last 3 to 6 months when we're on the road traveling, meeting with companies. And I think that it's happening at the intersection of IT services and software, where I think IT services is going from like a pyramid shape where you have billable human hours to now like a diamond shape where you have an orchestrator that's a human that's managing all these AI agents. And you can pull up a dash and there's like thousands of AI agents that are working. They don't have names, but they have numbers. And they really sit alongside existing software, I think, and augment it. As a result, it's almost like little pieces of software sitting on top of legacy systems. And I think that's the direction that we're headed to.
Yeah, Jensen Huang said that all of their engineers are using these agents at this point right now. Where is the stock market play for that? Who do you think comes out on top in a situation like you're describing?
Yeah, well, I think that the companies that are building the infrastructure, the cloud players, the emerging cloud players, as well as the compute tiles, with AI infrastructure, NVIDIA, Broadcom, I think AMD can have some also well positioned for this market. And then I think you see neoclouds that are seeing a significant increases in demand there, where they're like more custom built for AI infrastructure. And I think that this market, it is kind of like, you got to build it and they'll come. It's like laying down the tracks for the railroad. It's capital intensive, it gets messy. You probably need some creative financing, some partnerships. But I see this as ecosystem building as much as anything. And as a result, I think that we need to see demand continue to scale and improve with new demand drivers like we just talked about.
Shares of NVIDIA outperforming today in a red tape after the U.S. reportedly approved the sale of several $1 billion worth of its chips to the UAE. For today's Tech Check, our Christina Partsenevelos has more on how those chips might supercharge the Gulf states' AI ambitions. Hey, KP.
And it all has to do with power. So let's start with the U.S. possibly just approving billions of dollars in NVIDIA chip exports to the UAE under an agreement signed in May. And this is according to Bloomberg. Those chips in particular will power a massive wave of data center construction. And the timing matters because of what's happening here at home. Data centers already account for over 4% of U.S. electricity consumption, and that could triple by 2028. In Washington, D.C., for example, residential bills jumped $21 per month starting just in June, with half of that increase driven by data center demand. A single AI data center can consume as much power as 80,000 American households. The UAE, though, doesn't have that problem. Running cutting-edge AI models takes staggering amounts of electricity. The cheaper your energy, the cheaper your intelligence. Business electricity in the UAE costs about 11 cents per kilowatt, roughly 30% cheaper than the U.S. average. The country runs on cheap natural gas and nuclear power. Morgan Stanley calls the UAE quote, an AI leader in the making, with its Energy Strategy 2050 pushing massive solar investments alongside AI infrastructure. The UAE is also investing $1.5 billion. They had a big announcement not too long ago in new data center capacity by 2027. Under the US-UAE agreement, this is the United Arab Emirates, by the way, American hyperscalers will operate a massive 5-gigawatt AI campus over there with cutting-edge NVIDIA chips and some of the world's cheapest power. The UAE is essentially positioning itself as the Middle East AI hub. And that's why this AI race isn't just about who trains the smartest model. It's about who can afford to keep it running, guys.
And I guess who can build it as well? Is it all American companies? I mean, are there Chinese alternatives that they can turn to, or is this American data centers being built across the world, including the Middle East?
There are a lot of benchmarks, but if you're going for like total cost of ownership and just the power that these chips provide, you would probably be geared towards American companies like NVIDIA as number one, AMD, and to a certain extent, some of the hyperscalers. But China is catching up, especially when you talk about open source models. And that is a concern that even Jensen Huang raised on our airways just yesterday, that depending on where you are in building the data center infrastructure, China can compete quite well. And then I didn't even mention it. We talked about the UAE, but China does really well with power, right? They don't seem to have constraints like we do here in the United States. So that's another factor for them to keep climbing up when power is not a constraint.
Target more bullish on NVIDIA, raising his target to $300 from $240 with a buy rating. Christina's still with us. CJ, welcome. You just hosted NVIDIA for investor meetings. That included CEO Jensen Huang, the CFO, and others. What did you learn from NVIDIA that you obviously liked hearing?
Yeah, sure. Thank you first for having me, and good afternoon. I would say that, the key focus was, what has led to this explosion in token demand and therefore this shortage of stood-up GPUs and the CapEx announcements for additional investments that are now on the come. I think B, a real focus on whether we're in an AI bubble. And I'd say categorically, the management team from NVIDIA highlighted that we're clearly not, that today is very different from 2000. And then C, they spent a great deal of time talking about their competitive advantage vis-a-vis AMD and custom silicon from the likes of Broadcom, Marvell, et cetera. So a great 3 days of meetings with investors there in Boston today. And I think, taking a step back, the key takeaway is that the AI trade is alive and well, and we view NVIDIA, particularly at this valuation relative to its AI peers, as the best name for the most upside looking out over the next 6 to 12 months.
Well, because it's become very in vogue the last couple of weeks to kind of talk about how all this money is flowing. It's not an NVIDIA issue. To me, it's more of an OpenAI issue, which maybe is not your world. Any other comment on that, but also any other semiconductor companies we may be leaving out, we may not be mentioning, that you do also love?
Sure. I think you're spot on. OpenAI has a desire to be a hyperscaler. And the window of creating the AI platform is probably the next 1 to 3 years. And so their aspiration is to be as big as fast as possible. And to do so requires funding from alternative sources. And so that's where money from the likes of NVIDIA, AMD shares, et cetera, makes a lot of sense. They're going to have to tap the debt markets. I would imagine they would have to issue more equity as well. But on that front, they want to be the AI platform, and so they need to spend. And I think oppositely, the big hyperscalers, are seeing others encroach on their turf, and so they need to defend their space because it's existential for them as well. To your question around names that we might be missing, I would say in the last 6 weeks, we've seen, since Jensen talked about a 3 to 4 trillion AI infrastructure spend environment in 2030, we've seen investors start to look at the arms dealers. And so I would really highlight semi-cap equipment and as well as TSMC as great names to own as great laterals to this AI trade.
Yeah, to my earlier point, CJ, doesn't TSMC kind of win no matter who wins?
They are the monopoly arms dealer, so 100% yes.
When I hear people say, "Oh, well, this reminds me of 1999," or they're ringing the bell on the top of AI stocks, they are maybe acknowledging that the market is strong, but then they're trying to mark the end of that rally. And I think, for me, who was an analyst in the 90s, people forget that Cisco in September 98 was almost a 60 PE when the Fed made its first cut in 9 months, and then its PE went to 200. NVIDIA is that stock today, and it's trading at around 27 times forward earnings. I mean, it's got a lower PE than Walmart and Costco, which are like 35 to almost 50 times. So I just think a lot of good news has been accepted by markets, but I don't think it's necessarily priced into markets.
All right, I hope you're all doing great today. We have a lot of NVIDIA news to cover. But really quick, I need to give an update on IRON, because today we got the pricing details of the convertible senior notes offering. I'm going to give a simplified summary of what's happening here so that you know what this all means practically. And this is very important if you're an IRON shareholder. Through this offering, IRON has raised over $800 million. And that amount may end up being over $900 million because IRON granted the initial purchasers the option to purchase an additional $125 million worth of notes. IRON will be able to immediately start using that capital to accelerate their AI build out, which is great. The conversion price of the notes is $85.63, and the initial cap price is $120.18. As long as the share price is below $85.63, nothing changes. There is no dilution, and IRON can go ahead and use the raised capital to support their AI build out. If the share price rises above $85.63, then no holders will have the option to convert their notes. But here's where it gets very interesting, and I really like how IRON structured this. When the price is between the range of $85.63 and $120.18, IRON has the ability to pay the note holders cash rather than having to issue new shares that would dilute shareholders. Where does this cash come from? It's a result of the cap calls that IRON owns. IRON can effectively use their gains from the cap calls to offset the cash they have to pay note holders. This makes it possible for IRON to pay note holders cash rather than having to dilute and issue them new shares. Now, if the share price eventually rises above $120.18 and note holders choose to convert, that's when IRON would have to dilute and issue new shares. But notice this. The end result is that we are unlikely to see any dilution from this offering as long as the share price is below $120.18, meaning dilution is unlikely to occur until after the stock rises another roughly 90% in price. Again, I really like the way IRON structured this, and it's a win-win-win scenario. IRON gets the capital to immediately accelerate their AI build-out. Note holders get the option to exercise their notes in the future, and shareholders don't have to worry about major dilution from this offering until after the stock rises another 90+% in price. At the time of recording, IRON is up well over 100% from when we first mentioned on the channel 1 month ago, and I think there's more upside over the next 1 to 2 years. It's important to recognize that the stock is moving higher due to a fundamental change of the business. This is not just another hype stock. And while I'm bullish on IRON over the next couple of years, there will most likely be pullbacks along the way. That's why it's important to have at least a basic understanding of the company so that you are not scared out of your position when a pullback happens due to a lack of knowledge about the company. I highly encourage you to research IRON. There's a video of IRON's co-CEO posted on the channel that can serve as a nice starting point if you want to know more. You can find that video on the channel homepage. Now let's cover today's NVIDIA news. Bloomberg is reporting that the U.S. has approved several billion dollars worth of NVIDIA chips to be shipped to the UAE. You may remember last week, there was a report from the Wall Street Journal claiming that the NVIDIA UAE deal was frozen. As I said back then, I did not view the pause as a major problem, and I thought it would likely be resolved. And now, based on Bloomberg's reporting, it appears the issue has been resolved and the deal is moving forward. As I've been saying for a while now, we should see revenue from certain large-scale sovereign AI deals start to show up either as revenue or revenue guidance on NVIDIA's Q3 or Q4 reports. That's one of the reasons I like the fundamental setup for NVIDIA through the remainder of this year and into 2026. Another reason is the production ramp of Blackwell Ultra, which is leading to revenue growth acceleration based on NVIDIA's Q3 guidance. And we just got TSMC's September revenue report. Revenue was 1.4% lower month over month, but revenue was up 31.4% year over year. Month over month decreases in TSMC's revenue is a very normal occurrence and nothing to be worried about. The point we should be focusing on is that revenue was up 31.4% year over year as Blackwell Ultra is ramping strong. Remember, TSMC is the company that manufactures NVIDIA's chips. Also today, Cantor Fitzgerald raised their price target from $240 up to $300 per share. I usually don't put a lot of weight behind analyst price targets, but this one is notable for a few reasons. First, it's the firm that was previously led by the current U.S. Commerce Secretary. Second, this price target is a new street high for NVIDIA. And third, the price target was raised after the firm held discussions with Jensen Huang, Colette Kress, and other NVIDIA executives. Cantor Fitzgerald emphasized that AI is, quote, not a bubble, and that we are still in the early innings of a multi-trillion-dollar AI infrastructure build-out. Also today, Microsoft Azure unveiled the world's first NVIDIA GB3 300 NVL72 supercomputing cluster for OpenAI. Microsoft CEO posted a video of the cluster today on X. I want to reiterate something I said in yesterday's video. Many of the AI models available today were not trained on NVIDIA's latest architecture. Many of them were trained on Hopper, and some were even trained on Ampere. As NVIDIA ships better hardware, and as larger clusters come online, we should see notable improvements in AI models. As Jensen has said recently, we have two exponential curves of growth: the exponential growth of AI's usage and the exponential growth of AI's improvement. Both of these growth curves are compounding the need for more compute, and that should continue for some time. I'm also seeing talk online that Amazon is raising their prices on per-hour use of NVIDIA Blackwell GPUs, as well as H200 rental pricing. If true, this would indicate that demand is extremely strong and far outpacing supply, because Amazon would not raise prices if the demand were not there. This would also be great for other companies like CoreWeave, Nebius, and Iron, as it would indicate that demand is very strong. And if Amazon can raise prices, these other companies can likely raise prices as well. I continue to be bullish on NVIDIA long term. I really like the fundamental setup through the remainder of this year and into 2026 due to multiple factors. Certain sovereign AI deals coming online, Blackwell Ultra's swift production ramp leading to revenue growth acceleration, and what I'm expecting to be a surge in compute demand fueled by agentic AI that extends well into 2026. Looking out further, I also think most analysts are still vastly underestimating NVIDIA's long-term growth. Of course, I expect NVIDIA's data center business to continue growing strong, but I also think most analysts are not adequately factoring NVIDIA's other business segments into their long-term estimates. I'm especially bullish on NVIDIA's long-term growth in physical AI and quantum computing. NVIDIA is actively establishing themselves as the underlying foundation of both of these emerging industries. NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. And Jensen told us earlier this year that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. Just as NVIDIA used their GPUs to speed up CPUs, they're now going to do the same thing with QPUs. And as for physical AI, NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. We're no longer talking about AI agents that complete digital tasks. We're now talking about physical AI agents that complete physical tasks in the real world. This is going to transform the world as we know it, and NVIDIA stands to benefit massively. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. In addition to physical AI and quantum, NVIDIA also has many other large growth opportunities that they're really just starting to capitalize on in a meaningful way, including sovereign AI, enterprise AI, which Jensen believes is an opportunity worth hundreds of billions of dollars, and many AI native startups. I think many analysts are not adequately factoring all of these large growth opportunities into their long-term estimates. And I think NVIDIA's long-term growth is still being substantially underestimated. Looking ahead, we have NVIDIA GTC in Washington, D.C. later this month, with a keynote from Jensen Huang scheduled for October 28th. Be on the lookout for any sovereign AI initiatives with the U.S. government or large-scale projects with U.S. companies. I say this because Jensen usually announces large-scale projects that are unique to the region where the GTC event is held. And this event is being held in Washington, D.C. Jensen told us on NVIDIA's earnings call that he is anxious to share more details about Rubin with us at GTC. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.